Hey everyone, this is Michael Bengiat. This is the Stock Picks weekend video for June 25th, 2022. Sorry we didn't have a video last week. I had to have some rotator cuff surgery on my shoulder and that kind of knocked me out for a week, but we're back now. So in this video, we're going to go through the current market environment and then we're going to go through the stocks on our watch lists. We don't really have any stocks on the ready list right now and we have no positions. Before we start, here's our legal disclaimer, and you can just go through this. And just want to say that any content information in this presentation is provided for educational and informational purposes only, and should be in no way considered investment advice. Okay, so we got a follow-through day on the market on Friday, yesterday, and so but instead of moving us to a green light for our stock environment indicator, we're at yellow. And the reason we're at yellow is that there's virtually no stocks ready to be purchased. It's very kind of an unusual situation. But sorry, let me back up a second too. Well, we got the follow-through disc. This means that we had a rally attempt that we had, the indexes had tried. This was a fifth day follow-through. In other words, the follow-through disc shows the qualifications are the market. One of the major indexes, usually the S&P or the NASDAQ, but sometimes the Dow, needs to rise at least 1.25% on higher volume than the previous day. And the bigger the moves and the bigger the volume, the better. So we did get that on Friday, but there's a little caveat on that. The volume did come in as massive, which normally you'd say, wow, that's just showing institutions are piling back in. Really shows a lot of strength for a new potential uptrend. But we had this annual rebalancing of the Russell index, and that really just skewed the volume higher. And going just right up into the close, the volume was actually trending lower. So we would not have got the follow-through day, we'd still be technically in a correction. But we did get that technically, but with a sort of an asterisk next to it. So we will... But we're going to treat it as if we are in a new uptrend. We don't know how long or what's going to happen with this uptrend, but it's sort of giving us the green light to excuse me, to start buying stocks. But in our case, we don't have green because, as I wrote here, the shelves are empty of merchandise. There's just almost nothing to buy. One thing I've been writing about is we follow this 5-month trend template that was developed by master trader Mark Minervini, who in fact, last year he came in with a 50% return in a terrible market. We were actually, and I think the next one was like way below that. So just an incredible trader over 40 years. So, but one of the things that we use in the trend template is just showing that, stocks need to be in a certain technical setup, and by that, and the stocks that are in the setup are what he considers stage 2 uptrend stocks. Excuse me. And all the leading winners, 99% of the big winners have come out of being in this stage 2, excuse me, coming out of a stage 2. But right now we got a little bit of improvement, but we're down to 67 stocks. They were 49 on Thursday. So it's really a really anemic number, and there's just nothing. Almost nothing there. The second thing is that the only sector that had been leading up to this point was really oil and a few other commodity names, and those have all sort of fallen apart, and so there's almost no leadership or anything. So we will, we're going to go through some of those stocks, but I want to kind of show you too what the other thing that's been happening. Let's just take a couple stocks that have attempted to break out and have broken out, but are not giving us any kind of way to get in it without taking on an extreme risk. So you can see here, this is a stock, Chef's Warehouse, CHEF is the ticker symbol. You can see we had a little a W bottom or a W base here, but the stock just kind of came screaming straight up and just flew straight through it on nice volume. So it all looks good, but this didn't give us anywhere that was a low risk way. We don't want to buy into volatility. So like this stock, where there's so much volatility going on, 35 to 27, back to 35, and then down to 26, and then up to 39, and then 31. this is too volatile. We don't want to buy into volatility. We want the market and the stock to be quiet before that. We want to see less volatility before we buy, because this is just, what is this telling? What is volatility really doing? It's telling us that people, investors, don't know how to price the stock. And so without that, all you're doing is, as soon as you buy a breakout, you immediately fails, you lose money. You try to buy a bottom, well, you couldn't buy this at the 50-day because it just kept breaking through the 50-day, then up again. Okay, we went through the 50-day, then back again. And then we really broke it hard. We are also breaking below the 200-day. So you can see, add all this together, this trading these stocks just chops you up, and you just end up losing. Sure, you might lose a little bit because you put tight stops, but in the end, you'll just get chopped all up. So there's a lot of stocks like that. Here's the second one, Johnson & Johnson. Because of the way the market's been acting, we're just getting these blast-offs up into the buy zone. So this is in a buy zone, but this move up into it is just, it's actually the biggest move in this whole kind of very odd-shaped base. And we don't want that. We want it to be nice and tight before it moves. And we're not seeing anything like that in these stocks. So they're basically unbuyable, even though they're moving into buy zones. So we've taken off a lot of our buy ranges and just wrote not defined yet, because we don't, we're just not getting where we can get in risks with low risk. Sure, in hindsight, you can say, oh yeah, I should have bought it here at the 200-day. Well, yeah, it's in hindsight. In hindsight, everything looks like it was an easy buy and easy money. But in real time, when you see this stock had this base, broke the base. So now we have a base failure and just came screaming straight back up. That's not something you want to buy. Ideally, this would quiet down and trade around this area, or even up around its old highs, give you an area that the sellers are no longer piling in, and then a breakout. So but it is one of the leaders, so we're going to be watching it. So anyways, let's go to some charts, because this stock is in our charts, and we'll talk a little bit more about it. So let me switch over to our MarketSmith charts. So the first one is Resource Connection. This is the weekly, but you can see it. Look at the power of the stock. It looks like it's a leader, or an emerging leader. So we're going to be watching it. But again, the same thing. It was forming a nice cup base, nice symmetry too. You can see, like, this cup has a nice sort of overall symmetry to it. Unlike some of them where you get like a cup that goes like this, and then it just screams up the one side, and you get this kind of chopped looking cup. That's not a good pattern to be looking at or buying. But in this case, we had a little too much volatility here. We had this kind of handle that formed, but a little too deep. We went from 19.42 to below 18. The handle should be tight. That is not a tight handle. That's a pretty big, almost a 10% move. We had a big move the day on Thursday. In fact, this was down. Oh, because it opened high, it's just showing that it closed just 2%. But it actually made a pretty big move. And then we had a huge move on Friday, almost 12%. Just not giving us a buy spot. We actually had this originally as a buy at 1943, which would have been, but it just came screaming through. If somebody bought it, that would have been fine. But it just wasn't really a low risk area, especially in this kind of environment. So we're just going to watch it. But it's giving us all the signs of a leader, though. Breaking out to new highs on a follow-through day. RS is screaming higher. You can see this. We have the RS blue dot. Let's look at the weekly. It's breaking out of this kind of long consolidation. Let's go to a monthly. Now the monthly is the stock hasn't done much, but it's giving us some show of it's starting to get above. Let's see. We've broken above the highest. So going back to 2011 was the last time the stock had been up here. So, and we're getting some nice moves in the monthly. So we're going to watch this. It's a little thin though, only 205,000 shares trade, but we're going to watch it. I mean, ideally, you might even be able to get it back in a pullback. It's common for these, when they make these big moves, that you start getting a pullback. As long as the pullback is orderly. Here, let's take this one example. This is not orderly. So we had a big move up. Okay, you would have thought, okay, that's time we'll try to get in. Next day, we kind of gap down below into the range. That's not bad. But then every day, you can see we had one, then we had a lower close and a lower close and a lower close, a little anemic pause day on almost no volume, and then lower close, that's not a pullback you're going to buy. That's just that's another just sell off. So there's really nothing I can look at on this chart where I can give you that. But ideally, it would come back here. It would stay, maybe even drift back to the top of this little buy point here. But you want to see just a drift down, no big moves, low volume, and then if it turns back up, that's where we'll maybe see if we can buy the stock. So, but you never want to keep your eyes off of these leaders. These stocks that come out, the first sign of we're in an uptrend. We're still in a bear market, but the first sign of an uptrend, the ones that start breaking out early are ones that you don't want to keep your eye off those. Next one is British American Tobacco, ticker is BTI. Now this is a defensive stock. A lot of these stocks just don't really generally make big moves, though this one it did back in November. But that's just this, we've been in a bear market, so kind of money flowed into value stocks, real defensive stocks. So this one, we do have a buy, again, we have this, it's sort of a cup that's forming. The pattern recognition on this is showing a consolidation, but it's really more of a cup. Again, we're looking to maybe buy it right above this. The RS is nice and strong. Let's take a look at the weekly. Let's see the weekly. These stocks are just, they don't inspire a lot of passion to be owning British American Tobacco, because look at this history. I mean, it's really, that's just not a stock. I mean, now going back to 2002, that was a nice move. That was something that, you would have loved to have been part of, but this is just a lot of chop and slop, as they call it. So anyways, but it is acting well. It's on our list, but it's just it made a nice move on Friday. So, but we'll watch it. But ideally, we like to buy a little more dynamic stocks that are typically in the growth area. But this market, most of these growth leaders have just been decimated, and there's really nothing to buy. Okay, so health equity. This is another leader too, that we like this. And why do I say that? Few things, there's positives and negatives in all stocks. Let's talk about the positives first. So first, it's a nice trader. It's not giving us massive gaps and runs. Sure, we had an earnings gap here that the market didn't like, but then it's kind of come back, and it's a nice tight trader. So that's a great sign. We did have it's formed this cup, kind of a sharp decline down, and it's kind of creeping its way back up. And if you also look at down here, even though we had a big plunge here, but look at the number of spikes above the 50. We've had a lot here. This is accumulation. Even though the earnings are negative, that's one of the minuses we'll go to in a second. But look how many up days we're seeing here. A few down days on high volume, but we're getting more and more up days on high volume. Let's look at the same thing on a weekly. A little bit different picture. Now we did have one really strong week here, but this week is also above. So you got some pluses and minuses. Going to the minuses is the earnings are actually negative. They're coming in lower than the previous. And you can see in next year, from 2021 to 22, 23, we actually have declining earnings per share on the annual basis. Growth rate's 23%. That's pretty good. And overall, the stock's getting an 84 out of 99. It's just this is the market. It's one of the better stocks in the market, but it's really that's actually setting up into something that's buyable. So we'll see. This is just one we'll watch. Sometimes you just don't get a lot of great merchandise, and coming out of this market, that's definitely that's the case. And so we're kind of giving you the best of the worst. Here's another one, Centene. This is healthcare, medical managed care. Healthcare is actually one of the few areas that's doing well. In fact, all the rest of the stocks we have are all in the healthcare. And industry group is 41 out of 197. So it's in the top 25%, which we'd like to see. A little bit of choppy trader. Earnings and sales are been improving, but nothing to, nothing to stay to get you super excited. On the weekly, we are getting, you can see it's just outperforming, strongly the overall market. So we like to see that. It's giving the signs that this stock could be a leader. Overall, 96, good. It's very good. Earnings per share rating, 93. Fundamentals overall are good. It's a big company. It's a $48 billion company. And overall, you can see earnings per share on an annual basis just continue to grow. We don't see any negatives there. It's sort of a slow grower. You can see here was one really nice quarter, up 120% from the previous, but we're kind of just been, it's kind of a steady mover, steady grower, but it is outperforming, so we're going to be watching that. Next one is United Health. Same sector, a little bit better trader. Again, this is a big stock, good fundamentals, increasing earnings on an annual basis. The earnings are a little erratic, up 29, 78, then plus 3. We don't like to see that kind of a drop. And then we had a sales plus 11, plus 13, plus 14. Okay. Margins are increasing. Overall, not bad, but it's been volatile. And right now, we don't have any kind of buy point, but we're watching it. It looks like it's forming a base. We're kind of coming at the bottom of the base. Maybe we can find some kind of a pivot point to get in a little bit early, coming up this right side of the base. Otherwise, our buy point will probably be near the previous high here at 553. So we'll keep watch on it, but the RS is high, it's 93. So we'll continue to watch that. So far, the best one was the first one, Resource Connection. It was an RS of 97. And that means it's outperforming all but about 2% of stocks. Okay, let's look now at J&J, Johnson & Johnson. Again, this one we just looked at. This one is acting better than the rest because look at the RS line, it's just screaming higher. And it's just really made a big move, coming up off this bottom. But again, not really anywhere to buy it yet. We don't like this volatility, but it is acting well. And then the last one is Humana, I'm sorry, ticker HUM. Again, kind of near its highs. Let's take a look at the weekly. Yeah, you can see we're getting a new relative strength high while the stock is still in the base. Those are, again, this RS blue dot is a really powerful signal we like to see. But you can see the stock's gotten a lot of resistance right around here at 470 or so. 1, 2, 3, 4, 5 times it's trying to get past that. Now that's actually can be a good thing, especially when the RS is coming up here, is that when it finally gets up to that and busts through it, and this is going back over about a year, you tend to get a nice, pretty big move if it can sustain the move above that. Let's go back to the daily. Yeah, you can see it over here. So it's around that same spot. So the ideal situation would be the stock will kind of come back up there, but instead of just selling off immediately, it will stay there, showing and the volume will decrease, showing that the sellers are no longer eager to just take their profits or get out around the 470 mark, but they've already basically gotten out of the market, and so the stock is now free to head up. It could also be just the overall market's been pulling it down over time. So that's the stocks on our regular watch list, and we have only one on our long-term outperformer, and that is XL Service. Ticker is EXLS. It kind of looks like Johnson & Johnson just kind of ripping right up this side. Now this one, let's go back, since this is a long-term outperformer. We do like this. It's just nicely increasing, run over time. The stock's been around for quite a while. Of course, you do see some pretty major dips, but this was the coronavirus crash. This was also a pretty big move down. But it's acting quite nicely, and the RS is actually outperforming too. Let's go to a weekly. That was a monthly. Here we have that RS line new high, the blue dot. Shows that it got support at this black line, which is the 40-week moving average. So institutions have been stepping up. Whenever it's gotten down there, it's kind of gotten a couple times broke below, but quickly got support. It's gotten support all over here. So the stock's heading slowly higher. Let's go to the daily. And again, we're kind of just a lot of volatility, so we're watching it. Though we do have a buy point right now of 152.14. So they'd be right in this zone here. But if it just comes screaming back up here, we won't buy it. We don't want to just buy it straight into a move. It's already made a big move before we buy it. That's not a great place to buy it. So that's it for the stocks. This one, let's just go through a little bit in the fundamentals too. So you can see just annual earnings going from $2, just nice increases. It's starting to accelerate here with 3.5, 485, 557, 626. So this is just a nice steady earner. Look at this. We don't see any red in the earnings. Margins are pretty good. Overall, the stock's getting a 97. Earnings are getting 88. Sales margins and return on equity is got an A. And growth rate's 15. We like a little bit higher, but that's what it is. It's still a small cap. It's just about $5 billion. So this could be a nice winner going forward because it's not a tech stock, but it's not a defensive stock and it's not a commodities-based stock. So it's one of the few ones that's actually up near its highs versus so many of these other tech stocks that have been just pounded. So those are really the best of what we've got going on. So we'll just wait. We don't want to just jump in the market. We try to buy things for the portfolio that we think are going to be strong and not just have to get out. Of course, this whole year it's very tricky. We've been out more than we've been in, but nothing wrong with that. We've outperformed the indexes greatly. I think we had about 9 or 10 stocks we bought that went down, stopped us out in a row, kind of knocked us our return down, but we're still, I think, at around, in fact, let me look it up while I'm here. Sorry, I'm on my other screen. 1 second. Okay, so our main portfolio, we're up 32%. 32.66% since we started in less than 2 years ago. So, but from this year, we started off, so we are down about 6%. So not bad considering the S&P went down 23% and the NASDAQ went down over 30%. So we're outperforming, which is what you really can't go wrong with that. Doing much better than most and avoiding the carnage that's happened. So that's about it. So we'll just see what happens. We may be buying something this week if something looks like it sets up properly, but we're, again, just mostly in watch and wait mode. Okay, we'll be back next week with more. Okay, thanks.